Hello, and welcome to the Post-Trade Distributed Ledger Working Group webinar on the future of money, CBDCs, and financial services. I'm Richard Shade, and I help to organise the PTDL group here in London. And I would like to welcome both our PTDL and our GBBC members, as well as invited guests. We have a great panel lineup today. And before I introduce them, for those that aren't familiar with the PTDL group or the Global Blockchain Business Council, let me give you a very quick bit of background. The Post-Trade Distributed Ledger Working Group is an independent organisation under the GBBC and composed of more than 80 financial, legal, regulatory, quasi-governmental and academic firms in GBBC's membership. The group meets monthly to discuss distributed ledger technology applications and regulatory developments in financial services. And the group has been active since 2015. And it came under the GBBC umbrella in 2018. Our current organising members are the London Stock Exchange, CLS Bank, BTG Pactual, Norton Rose Fulbright, Six Group via SDX, Wells Fargo, and of course the GBBC. The Global Blockchain Business Council is the leading global industry association representing the blockchain ecosystem and is a Swiss-based non-profit. The organization brings together innovators, thought leaders from over 76 different jurisdictions and countries to further the adoption of blockchain by engaging and educating regulators, business leaders and lawmakers on how to harness this groundbreaking technology. So without further ado, let me introduce our panel for you today. Our moderator is Andre Portillo, Head of Digital Assets at BTG Pactual and one of the PTDL's organizing members. Joining him for the panel are Fabio Araujo, CBDC Studies Manager at the Banco Central do Brasil, Morgan McKenney, former COO of Global Consumer Banking at Citibank and currently enjoying a sabbatical, and finally David Treat, Director on the Digital Dollar Project and also a Senior MD at Accenture. So over to you, Andre.
Thank you very much, Richard. Good morning, everyone. It's a pleasure to be here. Let's try to make this excellent panel in this, I would say, hot topic, especially these days, right? CBDC, central bank, digital currencies. Without further ado, I would like to jump right in. We have a lot of things to cover, okay? And I would like to start, guys, with some more introductory questions, okay? Especially the second one that I think it's, I would love to hear the answers, okay? First of all, if you can give, try to, let's see if I can agree in a definition of what is CBDC, okay? So would you agree that CBDC is a form of sovereign digital currency issued by a central bank on a blockchain, DOT, more broadly speaking, or are there other parameters that we can apply to this definition? Right? And the second one, what, in your opinion, caused this broad spread of, well, all the major central banks in the world studying and establishing some form of a CBDC? How was the role that Libra from Facebook back 2-3 years ago played in this environment? If you want to start, David, I would love to hear your thoughts.
Excellent. So I maybe in reverse order. I actually founded our blockchain practice at Accenture in 2015 after it lived in our applied research context since about 2012. And in late 2015, our very first client was a central bank. And at this point, we've worked with the majority of the G20 around the world and many others. So to your last question of what kind of got it moving faster, it actually was moving quite fast, at the time of, you mentioned, Libra's announcement and now called Diem, but it certainly entered the public discourse and the public domain. I hope I don't offend Fabio with this statement, but by definition, I think central banks have to take a very conservative approach. And so it was very quiet for years. because of the systemically important infrastructure nature of what a central bank does and its mission. But there have been a significant body of work before that. On your first statement around the definition, I think that's a great start. I think that I would add maybe two concepts. And then I'll pass it to Morgan and Fabio to add more. That I think if I take the widest step back and think about what's going on right now in this wave of innovation, and particularly in financial services, we moved from paper to electronic in the 90s and early 2000s. And now we're in the midst of starting the process of moving from electronic to tokenized. That this whole notion of tokenization, where suddenly you can have uniqueness in the digital world, we can break all of the orthodoxies of the message and reconciliation-based process that we've lived in for decades, and rethink this whole notion of what a bearer instrument in the digital world can create. It's that the technology is now unlocked that as a reality, that you can now have a unique object in the digital world with certainty of ownership and the non-repudiable, all of the efficiency of, if I handed you a physical cash or coin, but now translated into the digital world, it's that technology trigger that has opened up all of this wave of innovation. So moving from paper to electronic to tokenized, all enabled by a truly digital bearer instrument, is I would add to the context and definition.
Excellent. Fabio, you want to go after?
Okay. Morning, David. Good morning, Morgan. Good morning, Andrea. Well, regarding the definition, I think it's quite complete, and the addition of the tokenization part given by David helps to understand better what a CBDC is capable of. But I don't think that the blockchain technology should be part of this definition. It's certainly a very important technology, and maybe it's a dominant technology, but there are other solutions that don't rely so much on blockchain. I think it's a tool. From the discussion with other central banks, we see that this technology is taking the scene, and probably most, if not all, the CBDC implementations are going to use the technology. But for example, G+D has another solution that's not totally based in blockchain. Then I wouldn't put the technology inside the definition of a CBDC. But the digitalization, the tokenization that David mentioned, it's quite important. You need to have a way to recognize a digital or virtual object and to see that it's not a copy, it's not counterfeit, to deal with that. That's fundamental. A technology for doing that, and blockchain provides a way for doing that, it's fundamental for the definition of a CBDC. And for your question, what made this explosion of discussion about the CBDC issues? As David said, once a topic comes out of the central bank, we've been discussing that inside for a long period. We've been talking about this for a long period and evaluating the technology, and we see that the technology, the blockchain technology, has a lot of promises, and we find this quite important for the accomplishment of our mission. But what I think is driving this interest is the accelerated pace in digital transformation in our societies. We see that the tokenization of assets is increasing. The use of stable coins is increasing, not only Libra. Libra is one example of that, but you see that the digital counterpart of our real life is getting more accurate by the time. And you need some digital settlement process or net native process to settle transactions between these digital objects. And the CBDC is a natural way to do that. I see that a CBDC is a tool that will be added to the central bank toolbox to assure that we are going to continue to be efficient in maintaining liquidity and financial stability for our economies. Because if you have a large part of the economy, a large share of the economy dealing with tokens out of sight of the regulatory perimeter of the central bank, and these tokens do not respond to our monetary policy, we will be in the worst case scenario, right? You have a lot of the liquidity in the economy that do not respond to our monetary policy, and the firms dealing with that, with those tokens and those services that are very similar to what we have today in the financial market, they are not going to be regulated by the central bank. And this scenario goes against our main mandates of price stability and financial stability. That's why I think central banks brought this to the public and said, now we need to provide an environment where people can continue the innovation. The innovation is great. We need to fulfill this demand by the society, but we need to put out an orderly pace to do that, to guarantee safety, to reduce volatility, to make sure that we can control the liquidity in those markets and the stability of firms dealing with those tokens and those tools.
Thank you. Morgan.
Great. Well, it's a delight to be part of this esteemed panel. And maybe just to add on to David and Fabio's comments, I'll step back a bit on CBDC in the context of digital money. And I totally agree with David that we've gone, if you go back in time, we've gone from IOU to coins to paper to plastic to digital, plastic/digital, and now we're really in digital 2.0, true natively born currency. And we're in the early stages of a format war in digital money. And if we think about the contenders, again, to put CBDC in context, the first contender is commercial bank money, right? And that's actually what we use around the world today. It's a liability. All of the forms of existing digital money today are liability, except for Bitcoin types, are liabilities. So when you keep your money at Citi, thank you for your business, you're actually assuming that Citi will give you those deposits when you want them. We also have, of course, e-money, right? And that's exploded in the form of payment providers, but you're really taking a risk on them that they will honor the money that you have in your digital wallet. And then, of course, we have CBDC, which is really held by a liability to the central bank. So when you think about money, we don't typically think of money as a liability, but somebody is promising you to give you that money. And it's just who is promising to do that in these forms of digital money. And as we think about it, I agree with David and Fabio's comment that tokenization is critical, and that's not how these flavors of money really are today, right? Central bank money is not tokenized yet. Commercial bank money is not tokenized yet. And that tokenization is moving us from this concept of I am, therefore I own, right? I'm Morgan McKenney and I've showed a bank my driver's license, I've opened an account, and therefore I have access to that money. And we're moving to I know, therefore I own, right? So this concept of account-based financial systems are really, the next gen of digital is really this tokenization that allows, and it's massively disruptive to the existing financial system. And then on your second question, and we'll get into design considerations, and I don't think this format war of digital money, for those of you guys on the phone and video old enough to remember, Betamax and VHS in the US, that kind of thing, or cassette tape versus CD versus, your Apple iTunes account. This is not a winner takes all, right? The world of payments and the world of money is too big, too broad, that I think we'll have coexistence of account-based money, but we will be moving towards tokenization, and the design of which we'll need to talk about as we go along here. But what was the tipping point, if there was? I agree with David. I was working on blockchain back in 13, 14, and a lot of governments had already started looking at that. I think a number of things accelerated the trend. The first obviously was Facebook and Libra. It was a broad, big, hairy, audacious goal that woke everyone up in the presence of alternatives. Blockchain is a new rail to move value. And the presence of alternatives hustles up, the folks on the older alternatives to improve it. And we also saw China's advancement, I would say, is very important in thinking about development of central bank issued money. And we've also seen COVID accelerated digital payments. It reduced cash, right? In the UK, cash is down like 50%, cash withdrawals. And we've also seen liquidity. So central banks, and Fabio would know this way better than me, have issued oodles of money to get us through this terribly dark pandemic period. And that means it's creating Bitcoin as digital gold now, as an alternative asset class that maybe is not as inflatable, and also risk appetite. So people want access to higher returning assets and low interest rate environments. So I think all of these factors are contributing to a concerted focus now, or accelerated focus on digital money. And the last is digital economy. You need to have more natively issued digital money to participate well in the digital economy. And we can get into that more as we go along.
Excellent, guys. I think Fabio made some point that I think it's important, that maybe we should not define the technology in the definition, because technology can change, right? So it's important. But in the way that I see and I use the analogy is that we have already digitized a lot of our processes, including the financial markets, right? But I think most of these we digitize, but we still on an analog frame, if I can say that. And maybe now we are moving to another phase that we're going to have, digitize it, working on a also digital frame. I think that's because that happens a lot, especially in capital markets. Okay, everything's digital, but all these steps are still the same that we have come when we were in like a analog physical world, right? Morgan, if you allow me, I would like to stay with you, okay, for these next one. You hold like a senior position in a big commercial bank, okay, which is Citibank. I'm client with Citibank, by the way, okay.
Thank you. Thank you very much.
How do you see the frictions and limitations in terms of our current payment systems that eventually can be solved with a CBDC?
Absolutely, Andre, it's a great question. And you guys might not be able to tell I'm glowing, not because of the palm trees in the back, but because I have been on sabbatical for 3 months. So that's given me an opportunity to step back and I focused my sabbatical, besides joy factor items of skiing and hiking, on innovation, where the world of financial services is going, without having time to think. And what I would say is, when people think of legacy, and I love, Andre, your comment about an analog frame, that is the world that we're operating on today in the financial system, payments and well beyond, right? All of capital markets. And the definition of legacy, people think old, they think antiquated, but it's also that it works, right? Citi processes $4 trillion of payments a day. That's the world's GDP in 20 days. So it is working, but as you step back, if we take payments specifically, there's an incredible amount of inefficiencies still, and there's been a lot of progress, right? SWIFT has worked on most of your payments that you send cross-border as a customer, consumer, actually get from bank to bank in under 30 minutes across most corridors in the world. Maybe 60% of the world's payments get done in under 30 minutes, and probably under 10 minutes in general. And SWIFT has the data now. And a lot of markets around the world have launched these domestic payment schemes that are instant and 24/7, right? So when you're a consumer in India, you send a payment, there's no cutoff time. It's going instant, and it is always on. It's 24/7. So legacy has been improved. But that said, it's still expensive. It's still inefficient. It still takes time to move money around the world. And basically you're instructing somebody who then instructs another, it's still a long chain. So what I would say is, as more and more of the world's goods and services get bought online, right? Right now it's only 20%, let's say, of the way everybody buys. You need efficient forms of digital payments, and fixing the legacy, in my view, I think will be inadequate to solve that. So for instance, a range of micro payments use cases, right? Whether it's social influencer paying them for, marketing your product, whether it's gig economy workers that are working for a few hours, helping you out, whether it's this concept of programmable money, so you don't have to think about the payment, right? So I think it's still quite inefficient. So having the opportunity to step back, there's a lot of improvements, and a natively born currency, there's a lot of friction of going in and out, right? You take the old analog frame, then you have to go onto the digital money frame, and then you're in the digital money ecosystem and the digital ecosystem, and that creates a lot of friction. So I've come to the view that improving legacy will be insufficient for all of the modern economy's use cases. And that's why we need to get on a broader digital frame and backbone. And that includes this tokenization concept.
Great. David, going back to you, you work in a US dollar digital project, okay? And the US and the dollar, as I would say, the incumbents of the reserve currency world, okay? First, and that's a specific question. Is the US dollar right now in a position like a big and old company to be disrupted? Because if I see all the signs, that's the situation, okay? If you can touch on that, but also tell us a little bit more about the digital dollar project, okay? How committed you think the US is on this project? Because again, as the world reserve currency right now, it would make sense to have a more conservative approach to that. Okay, let's wait what the other guys will do, okay, and then we can figure out what we need to do. But coming to my first point, this might also put in let's say a weak position in terms of if we consider, well, there's always this a fight between currencies around the globe, right? Especially now with China rising as a superpower as well. Okay, so what are your thoughts on that?
Yeah. So let me trying to get a sequence to take there was a lot in there. So Chris Giancarlo, Daniel Gorfine, Charlie Giancarlo, we formed the Digital Dollar Project in the fall of 2019 and launched it officially in January 2020. All on the back of Chris and I were actually at the Singapore FinTech Festival, and we were looking at some of the phenomenal work that that we had been a part of with Singapore and Canada, and there's been an epicenter of CBDC work in ASEAN that was very apparent at the Singapore FinTech Festival. And Chris and I were both there and just basically bemoaning the fact that we hadn't really the dialogue hadn't gotten going in the US. And there just wasn't progress being made at that time. And Chris had left the CFTC, he had written a piece, an op-ed piece in the Wall Street Journal on the same topic. And we basically just said, look, let's on a pro bono basis, let's just see what we could do to get the dialogue going. And so we launched the Digital Dollar Project in January of 2020. We formed an advisory group of more than 36, bankers, ex-regulators, ex-central bankers, academics, members of the law community, and put out a white paper that spring. All to just get see what we could do to get the dialogue going. If I fast forward to now, we've testified before congressional Senate Banking Subcommittee a couple of times now, congressional FinTech, the dialogue on the Hill, the dialogue we've been briefing and working with the Federal Reserve governors and organizations constantly throughout this. And at this point, the level of dialogue, is just fantastic, right? So Chair Powell put out statements, even of it recently highlighting, that they're going to be putting out a position paper this summer. Project Hamilton is the collaboration between the Boston Fed and MIT is making great progress as we understand it, and expecting, really looking forward to what they're going to put out in terms of open source contributions. And so I see that the U.S. is now very much on an active footing, in this space. And I guess to part of what you were asking the question of the importance of that, the dollar obviously is currently the world's reserve currency. I think if you look back through history, and I that's as a hobby, a bit of a history buff, right? If you go back through history, reserve currencies have always been defined, I think, fundamentally by two characteristics, right? The strength of the economy that underpins the nation state that produces it, and then the functionality of the currency itself. And actually, so this one, this used to be in the early days of the United States, right, and pre-colonial times, right? That was the reserve currency. It was the Spanish real, and it was because it was a higher quality silver. It was lighter, so you could transport more of it when the weight of currency was a big material, and it could be fractionalized. You could literally cut it, and that's where the notion of pieces of eighth came from. You could actually cut it and turn it into smaller denominations. At that point in time, that was the most innovative currency, and it was the most advanced, and so it was the world's dominant reserve currency up until the mid 1800s. And so as we look ahead, and if I just do a terrible job at paraphrasing Justin Trudeau, right? And to play on Morgan's comments, that the pace of technology change it will never be as slow as it is today, right? It is constantly getting faster and faster. And so as we look at how the digital environment is evolving at this faster and faster pace, any organization that's encumbered by legacy technology debt in both definitions, as Morgan shared it, right, of just the existing infrastructure, to be freed from that and to start to use highly component-based, digitally native, most advanced tooling, that's going to make a material difference as our digital world advances faster and faster and faster, and that applies to currencies. And so I think what central banks around the world are doing, and doing a fantastic job about, is recognizing that money plays an integral part in that digital transformation. And if we don't have digital tooling that's digitally native, and and these predicate capabilities to be able to support that development, then that will signal trouble. And if I phrase it positively, right, I'm just wildly encouraged. I think the BIS report that came out last fall, that of the 80% of the world central banks are on this journey, I think is just massively encouraging. I think that it had necessarily moved slow and cautiously, and now it'll necessarily move cautiously and faster. To Fabio's point, right, this is systemically important infrastructure, and it has to meet those expectations and requirements of safety, soundness, security, trusted operational constructs, auditability, transparency, all of the characteristics that they need. And so I see the U.S. on a forward-leaning footing, and getting involved, as are many of the central banks around the world. So let me pause there, because I took too long to answer that question. Sorry.
Excellent. Fabio, central banks have been putting up some more definitions about the way that they see the digital real, the Brazilian CBDC. Can you give us more color about the roadmap, and how the Brazilian central bank is on this roadmap on the CBDC?
Right. Well, as Morgan said, the legacy systems are getting improved. In Brazil, we already have a system that's pretty much a synthetic CBDC, because our payment institutions, payment providing service institutions, they need to have full backing of the deposits in the central bank, in reserve forms or in treasury bond form. Then the people has assured that they can get their money out of the system. And in that sense, it's quite similar to the central bank, to CBDC, but it's different in that very important aspect that we mentioned before. It's not native to this tokenized economy, to this unique representation of assets and real assets or financial assets. that need to be dealt with in the new financial economy. We putting this together with our instant payment system, we are able to provide most of what people now expect of a CBDC, but we are not sure that the system is going to be able to provide all the services, mainly this smart contracts and programmable money services. We are not sure that we can incorporate in our current system. That's why we are putting forward the CBDC effort. Then in last May, we issued some guidelines. Those guidelines are operational and are in line with you guys are talking about, and all the discussion about CBDC. It's important to be a reliable tool. It's important that people have confidence that the data is not going to be misused, and because confidence is the base of the financial system. If you don't have confidence, people are not going to trade, right? Then it's very important to have a native tool that provides confidence for the user, the final user. As Morgan said, people don't see the difference between bank deposits and their cash. That's because they have trust in the system. In countries where the commercial banking system is not trusted, people want their money in cash, physical money. Money in the bank is not the same thing. And we will need to provide an environment where people will perceive the CBDC as good as bank deposits or as good as the physical realm. That's our objective. And for that, we issued some directives, some guidelines last May. As for the roadmap we have ahead, we are not quite sure that the Brazilian market is ready for implementing all these technologies. We think that we need to take a few more steps before it gets mature enough. We have a innovation and reform agenda of the financial system going on, the BC hash agenda. Apart from PIX, there is another very important step that we think will provide better conditions for the development of CBDC, and this is the open banking initiative. With the open banking initiative and with people aware of the value of their information and with new companies, new fintechs using this information to create new kinds of financial service or new ways to provide financial service for people, they will naturally need a native way of settlement. And the CBDC is the answer that we see now for this problem. That's why we think we still need to wait for the open banking initiative to mature. So this environment of new firms that will be dealing with people information in a more efficient way will start providing financial services, and they will demand a native digital way for setting this transaction. But as of now, we don't see the market completely ready to use these new technologies, smart contracts and programmable money as yet. But we think that in 2 or 3 years, the open banking initiative will mature, and we are going to be in a much better position to decide whether the CBDC is going to be released and which features we are going to use in the initial release of the CBDC. Then we have this horizon of 2 to 3 years in mind to wait for the maturation of Brazilian market, our agenda, and the international agenda. Because as was said before, cross-border is a very important issue for CBDCs, and we need to make sure that the technology and the solution we adopt in Brazil is going to be compatible with others, because otherwise we're not going to make any efficiency gain, right?
Fabio, let me continue with you, because you already started talking about PIX. And for those who don't know, PIX, P-I-X, is the instantaneous payment system that we have in Brazil. If I'm not wrong, was implemented in November last year or October last year, right, Fabio?
November.
November, yes. And it's something that completely dominated the transfer of money in Brazil. I'm not sure the last numbers, but I would guess more than 80% of the transfers are already done in this format, right? And it also serves for payments. Although for payments, it's not the adoption was not that big like for transfer. If you can, Fabio, can you first explain a little bit more about the PIX experience, because I'm not sure that all people here are aware of this experience, and especially the fast adoption, and how do you see? You touch a little bit on that already, okay? But how do you see the PIX together with CBDC? Is the PIX, let's say, the launching platform eventually for CBDC for the central bank?
Right, Andre. There are lots of questions. I will try to answer all of them. Unlike what happened with China and with Sweden, our payment system is quite diverse. We have lots of firms dealing with payments, and this is basically due to some law that we passed in 2013, allowing for the creation, the emission of this electronic money that's backed in the central bank. This helped a lot the maturation of the payment services in Brazil. The instant payment system was another step on that. Brazilian people were used to make transfers using two other systems, was in-day transfer and next-day transfer, and they were very used. People were very comfortable using them, and the instant payment was initially seen as just a next step for the general user, but as André said, the adoption was much faster than we were thinking before. Like, actually, the number is like 60% of the transfers are now through PIX, peer-to-peer transfer. And payment, it's not such a high share, because we have a huge credit card market in Brazil, and debit card markets, then it's still small compared to that. But it's growing, and it's making viable new forms of small business. Many small businesses are using this as their main means of payment, and this is democratizing the payment services in Brazil. PIX is very important, but I need to stress that it's based on centralized technology, and in this legacy technology that we adopted. It's quite efficient. It's today it's an example for several countries. Our wholesale payment and our retail payment system, they are very modern for the technology that we are adopting, and we are not sure that we cannot incorporate most of the services that a CBDC could provide in the system because of the design, this backing of all the resources in the central bank. The funding is completely guaranteed by the central bank in the payment system. Then we think that most of the features can be incorporated in that. But these strictly technological features that we are mentioning before, how to deal with tokenized assets, and how to make sure that algorithmically decided transfers are made we are not sure that the PIX is going to be able to implement those. That's why we are putting forward the CBDC initiative here in Brazil. We think that this share of the economy is going to grow, and it's accelerating, as David said, and it's not going to ever be as slow as it is today. That's a good phrase. And we've got to be prepared, because central banks are conservative institutions. And to answer to a fast approaching threat, there are two options. You are fast to answer, or you get prepared beforehand, right? And we are not naturally fast to answer to this kind of situation. Then we need to get prepared. We need to get people on board. We need to get the society on board, all the stakeholders, to discuss the best way. That was the way we implemented the instant payment system in Brazil. And it was a success. And we think that if we can make use of all the developments, and here the open banking is an important development of our agenda. If you can make use of this environment we are providing, we are sure that the CBDC is going to be a success. It's going to democratize the provision of financial services. It's going to assure that the companies dealing in the financial sector are going to be able to enter in this new era and provide services using these new technologies, and it will open up space for new entrants to make use of this flow of information that the digital society is giving for us.
Excellent, and it's absolutely astonishing how Pix went viral in Brazil. People are using in like social media, in gigs, and okay, just do a Pix. You cannot imagine how this thing went crazy in Brazil. David, going back to the digital dollar project, okay, and talking about also a roadmap. What are the primary objectives of the digital dollar project? And is there like a roadmap, some specific dates and objectives for that?
Yes. So we, in I guess late April, early May, we announced that we were pressing forward with pilot programs with our partners through the advisory group and their organizations, and then actually an open call to anyone. Right. This is a very open civic based philanthropic activity to get the education that's required from actual pilot experiences. And so coming out of some of the congressional testimony from last summer, there was a colloquy between Senator Kennedy and Chris Giancarlo around, well, if you were to do pilots, what would they look like? And so we formally published 9 pilots in response to that testimony. And what we've announced is that we intend to launch a series of them starting this summer. And so we announced the context for that. We're in the midst of, if you will, Chris likes to talk about it, is we kind of have we've got the pickup basketball game. We formed the court, we got the ball, we got the hoop. We got to now put the players on the pavement to figure out the right approaches. And so we're very intentional in that we want to make sure we're hitting on multiple facets of the spectrum. So we've got a big focus on financial inclusion and the unbanked, underbanked construct, and where this technology could be of help. And then we've got the core capital markets infrastructure use cases, whether it's clearing and settlement, and as an example, some of the great work that's going on at the DTCC around Project Ion and Whitney, or cross-border payments, as Morgan referenced earlier, around cross-border payment infrastructure. And so we're in the midst of forming those pilot teams right now, and hopefully we'll be making some more announcements in the coming months around the initial launch, and certainly then the whole purpose here is to openly publish the results for everyone's benefit. We're very focused on the on the behavioral, the sociological, the value case, use case, usage learning. It's not about the technology itself. And I completely appreciate Fabio's point. We're going to intentionally apply multiple architectural patterns to, but it's not about any one technology vendor or technology itself. We certainly have to have great technology as part of the pilots that would meet the characteristics of systemically important infrastructure and the public good nature of fiat currency. But that's not the focus. The focus is on the usage and learnings from that. So forming them now, look for announcements, and certainly anyone who's interested, please reach out. We want to form the right teams to I can't extend the basketball analogy, but we want to make sure we get some really good insights out of it to then inform the broader discussion around how does this play out, and all the points that the point that Fabio raised around privacy is at the heart of this, right? How do you balance our societal values around financial crime management and privacy, and how does that work? And I think maybe we'll get into that a little bit more here, but let me stop there. And
no, definitely. I would like to give one to you, Morgan, and then I think we have three specific topics that I'd like to cover with you guys. Morgan, first of all, I mean, with your experience at Citibank, but also in your already 3 months into sabbatical, that you are taking the time to really step back a little bit and try to see things in a more broader perspective. What are the major trends that you see in this whole payment landscape? Okay, because we see things popping up in all different directions. Okay, what are you seeing in these environment?
Thanks, and maybe I'll break it down into a few big headers. The first is real-time commerce needs real-time payments, and that sort of sounds obvious, but you need instant funds good when you buy something online, this grand global marketplace that everybody has access to via the internet. And credit cards, and there's a question in the Q&A about credit cards. Credit cards are the common form in many countries, but most folks, let's say in Southeast Asia, only 5% of consumers have a credit card, right? So that's the instant funds good. And that's where you get PIX and the adoption of instant domestic payments. But the world of payment, so I'd say that means the miniaturization of payments. So for instance, the world's manufacturers of goods used to distribute it through a distributor, right? So Procter & Gamble, all those things that you buy for your house now that you're in COVID times, are typically sold to a big distributor who sells it on to another distributor, who sells it on to an importer, who then gets it on the store shelves, and then you pay for it as a consumer. But now with the internet, right, and online commerce, P&G can sell things direct online, but that means the payments are micro. So you see this miniaturization of payments. You also see continued globalization of payments. And there's a lot of great domestic schemes, but the world of payments is not interoperable, right? And so as you think about consumer trends, the bar continues to rise. You expect a wow experience as a consumer based on your latest wow experience, whoever that was from, in your financial services life. And so even 5 or 6 years ago, I was like, why can't a payment be like a photo? Why? Today's world of payments is very channel specific, right? You have, Venmo in the US to send money P2P. You have to, everything is channels. So why can't you embed money in in an email, in a text, in a WhatsApp, in any social media device, in any way, and that it actually is transferred? It's not a duplicate copy, right? So that's where this concept of natively issued digital currency becomes so important to help the world of payments become much less fragmented. And it's quite expensive. I sent a wire yesterday. It took me 30 minutes. I had to call and it took me 30 minutes and I had to say a lot of numbers, IBANs and SWIFT codes. And so as we think about the bar rising and this concept of how do you make payments more easily, more interoperable globally, and much less expensive. And the last point is financial inclusion. There's a question about 1 billion, unbanked. A lot of the world, Asia and Africa, are, 6 out of 10 people in Southeast Asia are underbanked or unbanked, let's say. And that means they don't have access to credit. They don't have access to wealth products. And you need miniaturization. To have miniaturization, you have to have scale. To have scale, you have to have a digital platform, a natively born digital platform. So I'd say these might be some of the trends that are impacting, I'd say, the need and demand for a range of digital money options that are very functional and much easier to use and much less expensive.
It seems that, well, the challenges ahead are huge, right? But I would say, yeah, we're gonna have to tackle these, I think, piece by piece, right? Maybe build the court, as David said, right? Guys, we have a little bit more than 10 minutes left, okay? And we have a lot of questions on here on the panel. So I would try to summarize a little bit. I mean, we won't have time to answer specific questions, but I'll try to summarize in some important points, okay, regarding CBDCs. The first is the question about privacy, okay? Because again, once you have a digital currency parked at the central banks, which, well, at the end is the state, okay? How these affect our privacy, okay? Because although it might be a substitute for like paper money, for cash, there's something that are different, right? You cannot put like a CBDC under the mattress, right? So as you can do with cash. The second thing that I think important is that once you move eventually for money that is parked in commercial banks, and then you have money that is parked at central banks, these can eventually completely change the way that our financial systems are built today, okay? And this can have impacts not only on privacy, but also in the reserve banking system, in credit, and so on. So I think if we can touch on these two subjects in this time that we have, I think we will be doing our job as we propose. So I don't know, David, if you want to start with that, with these two important points, okay?
Yeah, and I'll try to be super quick because I'd love to hear from Morgan and Fabio as well. But maybe let me tackle the privacy one. There's a lot of work going on in this space. And what I think the opportunity that's in front of us is to not be held to the orthodoxies of how things work today, or the orthodoxies of how we think the technology works now. We're actually at this incredible moment where the technology is enormously configurable to what social and policy and legislative, social values we have, and the policies and legislation that we want to develop around that. And so it is playing out wildly differently in each country, who should absolutely build central bank digital currency consistent with their own country's social values and policies and security infrastructures. And so at a very summary level, and I'm not going to do justice to this at all, but if you talk about the US, a central bank digital currency infrastructure run by the Fed or Treasury or its designees as national infrastructure, if you will, right? It's a public good, would be implicitly under the Fourth Amendment protection of information. Meaning there certainly would be no commercial harvesting of that data, as it's maintained and run by the Fed and Treasury, and the Fed and Treasury could only access the data through just cause, legal warrant, and our judicial system. But importantly, if we continue to value financial crime management, it's important that they be able to do so. So at a base level, the U.S. has a bit of a distinct advantage in that regard of privacy, in that. You can have you can have both. You can set the threshold. Today's threshold is, even a physical money transaction, anything over $10,000 is reportable. Anything under that is inherently private. We could extend that construct in the development of a government-run, CBDC infrastructure, and encode that logic in the token, or the token and/or wallet and/or infrastructure network, to basically say that under that marker, it's an entirely private transaction, and over that marker, necessarily, for financial crime management reasons, the government, needs to, if through legal warrant, have access to the data. You look at GDPR in Europe, where different from the US, where we have kind of broad commercial use of data and limitations on government use of data. Europe is kind of the inverse, right? Through GDPR, there's broad commercial limitation on data, but really GDPR is relatively less restrictive on government use of data, and so there may be a different choice there. And then of course you have China, where there's where they have a very explicitly and openly stated government use of data and monitoring is a core part of their their values around security, security and privacy. And so I think the most important thing here, I'll end where I began, which is the technology is wildly configurable to be able to meet those social values and expectations. And it's the important dialogue that has to kick off around, how do we want it to work? But you just have to be grounded in those expectations and the characteristics of systemically important infrastructure and how that works. So let me stop there because I took up too much time.
Great. Morgan.
Oh, I totally agree with David on the configurability, and tech is maturing to create those outcomes based on government's sort of objectives. What I would say is maybe to kind of big picture, maybe more to your second part of the question about how does this change the financial system? When the internet was conceived, it wasn't built with a buy button, even though that was contemplated. And that means the backbone of internet today is advertising, right? And that's created a lot of challenges that we all know about some of these platforms. As I think the perspective from Citi, how we're starting to think about it, is this concept of a regulated internet of value. And there are questions on the chain about DeFi. And DeFi, I have spent time on DeFi to try and to understand it now. And bankers' eyeballs fall out because this is massively disruptive, and the pace of financial services change, this is massively disruptive to the way financial services work. I don't think we'll get to true DeFi yet. Where you need to get is this tokenization, and not just of money, of all types of assets. So if you get to this concept, tokenization is representation of value. If you get it across the equity markets and the debt markets, and then money as well, you can really start creating a lot of benefits. And I'd say that's sort of this next step. And if CBDC can even move beyond money to how does the financial services system operate across asset classes and are interoperable, you get to this next gen digital infrastructure that we kind of started talking about. And then you could move maybe to DeFi, where you didn't need those trusted participants. But I think, I'll end it there to give time to Fabio. Regulated internet of value across multi-asset class on a digital backbone.
Fabio.
Yeah, I agree with Morgan. I think that the problem that you mentioned, the second part, the disintermediation problem, is of concern of the central bank. Is one of central aspects of our concerns. We are very much, and this concept of DeFi that we did not talk about up to now, this is also central. We think that it's coming. It may not come next year or the next 5 years, but it's coming. And we need to be prepared for that. That's the scenario that the central bank needs to be prepared. Disintermediation is coming, and then we need to provide the grounds so the participants in the market can make use of these tools, that they're going to be very important. The way of dealing with financial services are going to be totally different, whether the central bank starts providing a CBDC or whether it doesn't happen. There will be a demand for that. And we at the central bank think, okay, the demand is there. We need to provide an infrastructure that makes sure that people have a playing field to work on. And you are able to incorporate as much, as many customers, as many general people in the environment. Today, we have these services in the crypto environment, and most people are not comfortable because we don't know where the funding comes from. You don't know about the volatility of prices. Then it's very important for the central bank to try to organize these to assure that innovation can hit most part of the population. That's the main goal of the CBDC project in Brazil.
If I can just offer one sentence,
Please, please.
On the DeFi front, I would love for all of us to recognize, like, to balance out and recognize that the D need that we're using the wrong grammatical tense. The valuable thing is that the decentralizing aspect of contemplating how do you balance recourse and governance and all of the expectations of what happens when it goes wrong, which requires some degree of capability to do that, that's incompatible with the grammatical form of decentralized. DeFi is only valuable if you can have the best of both, which is all of the wonderful characteristics of decentralizing with the ability to fix it when it goes wrong. Because if you don't have someone to turn to who holds the liability and responsibility and operational capability to fix it when it goes wrong, we've never in the course of the entire human history been okay with that concept. We thrive, we need as humans the person to turn to fix it when it goes wrong.
Yeah.
So if you can do both, fantastic.
That's our challenge.
I do agree, and I think it's to change this, which is okay. Eventually, when something goes wrong, you have someone to fix it, or at the end, someone to sue, right? So I mean, I would see that we're not near to not needing these type of structure. Okay, that's why I think that's one of the big challenges in DeFi, in my sense. Okay, it's not in our brains. Maybe in the next generation, but that's definitely something that we need to solve. Richard, I'll pass to you. I mean, we can have like 3 panels like this one, and we won't be able to cover all the subjects. No. Okay. I would like to thank you, David, Fabio, Morgan, and GBBC for setting up this. Okay. Again, the subject it's interesting, amazing, intellectually challenging. So I hope we can do follow-ons on these in the future. Okay.
No, I'd like to say thank you as well. I mean, a fantastic panel, really, really interesting. And we had a lot of questions, and I apologize if we didn't get to your questions. The number of topics we actually had to cover, I don't think the guys have even touched. So I'm sure you'll agree it's all been very good. So once again, thank you, Andre. Thank you, Fabio. Thank you, Morgan, and thank you, David. And if anybody's got anything they'd like to contact us on, maybe get in touch with any of your panelists, feel free to contact us through the GBBC website, or our details are also on LinkedIn. And I believe a copy of this will be saved and available via the YouTube or via our YouTube site. So once again, thank you all. And yeah, look forward to seeing you again soon.
Bye-bye, guys. Thank you very much.
Okay. Take care. Bye-bye. Bye-bye.